Today, this is going to be kind of an old story about listen to my story about a man named Jed. Well, I'm going to really kind of go back into detail as to how I got started in the multifamily business. These stories tend to be really the ones that people follow the most, and I try to get as real as I possibly can, because I know everybody who's trying to start buying multifamily properties are always scared. They're afraid to do it, take the first leap. There's only one way to do it. You just got to rip the Band-Aid off and make it happen. So let me walk through with you a couple of like how I got started. So, I graduated from law school, went back in the insurance business, but on a very unique niche. And then I started my own insurance firm. It was, we had about $3 million in revenue, had about 35 employees. It was the absolute worst business in the world to be in, just atrocious. What we did is it was a benefits administration company where we processed medical claims for self-funded companies. And I tell you, you could do 10,000 things right in that business in a year. And if you paid the owner's wife's medical claim wrong, you lost the account. And it was just so backstabbing, cutthroat, conniving. I hated it, absolutely hated it. And I was running this business, and it was one of those businesses where, some months my employees made more than I did. And I had a terrible partner that, it's kind of interesting. I'm old enough now that I go back and I haven't, after we split up, never heard sight nor sound of that guy ever again. And just Googled his name a couple months back, and he had passed away. Didn't even know, but man, but my life was miserable. I hated what I did. I hated getting up and going to the office. I mean, when I walked into the doors and all the employees were around, I thought to myself, I hate being here probably as much as they do. And this is just no way to live a life. It was just terrible. So I finally got to the point, my absolute breaking point. I said, I can't do this anymore. And my wife said, what do you want to do? I said, I want to get into the real estate business. I want to own apartments. I've always wanted to own apartments ever since I was a little kid. And, let's do it. And so I burnt the ships, as they say. And I went to, I sold the company and made a little bit of money. And I used that as the seed capital to have me go out and own apartments. And what I did what everybody else did. At the time, the internet was totally in its infancy, but people were out there promoting, their how-to things. And I signed on with one of these gurus who I do not recommend, and I went to his 3-day boot camp where you learned everything you needed to be dangerous in this business. And, looking back on it, what my program does now is it fills in the biggest gap that they had in their program, which was they didn't teach you how to run a business. They didn't teach you how to run the business of multifamily. I'm teaching my students how to set it up and do it the correct way. But at the time I thought, okay, that's easy. I can go do that. And so I remember I didn't have a job. This was my ride or die. This was my only way out. So I had to make this work. And I remember them saying at the time that if you make 2 offers a week, you're going to be a success in this business, which was very similar to a thing that we used to say in the insurance business. If you make 2 sales a week, you are going to be a success. And in the multifamily world, in this business, is if you make 2 offers a week, you're going to be you're going to be a success in this business. And that's the first time I started to think that maybe this is going to be a lot like sales and marketing, and it is. It's really a sales and marketing business. I found that out after years of doing it. But I went and started making offers, and in this particular guru, when you were on his coaching program, you were placed in an emerging market city. Now, if that wasn't a dead giveaway as to who the guru is that I'm talking about, you're very young. So I was put on the Cincinnati emerging market city. Why? I had no affinity to Cincinnati. My college roommate was from Cincinnati, and I went out and visited him with a couple of times when I was out there. But I didn't have any love for Cincinnati. We just, as a group, evaluated Cincinnati and went looking for properties there and made offers and deals. We eventually bought one, possibly two. But while that was going on, while I was working in that group, I was also doing my own stuff, and I was looking all over the Midwest. And ultimately what happened was, because when you put yourself out there and you work hard, the luckier you get. You probably heard that statement before. But the more I put my name out there, the more things started coming into my purview. And one of them was, I remember my wife had met with a broker over the phone and said, next time you're out in Cincinnati, go meet with this broker. Her name was Eleanor. And I honestly, that was almost 20 years ago. I can't even imagine she's still alive today. Her name was Eleanor. Very nice lady. And I remember going up to her office up on one of the high rises in Cincinnati. And she was working for was it a mortgage broker? No, she was a broker. She was a real estate broker, but she wasn't affiliated with any particular brokerage firm. I remember, this is kind of where I came up with one of my tips for how to find deals where no one else is looking, is you find those brokers, the independent brokers who are not affiliated with the Marcus and Millichaps or the CBREs. And the way to do that is really to go to Google, type in Google didn't exist back then. Type in multifamily for sale, hit enter. We'll put in multifamily for sale Cincinnati, hit enter, and then go to the 4th, 5th, 6th pages of Google and start to see what brokers' names are popping up. Those tend to be the independent brokers that, fly below the radar. And those are the people you should be going after, because that's how we found, in the pre-Google days, this is how we found this particular broker. And we became friends. And I'll never forget when I told her what I was looking for. I told her I'm looking for a good, solid Class B 20-unit property. That's what I wanted. That was my goal. I had done the math. I actually wrote a book on how to own 1,000 apartments in 5 years. I wanted to own 1,000 apartments. And I knew that if I started with 20, I would be able to get to 1,000 in 5 years. So that was my goal. And she said to us, and I'll never forget, she goes, I know what you're looking for. I'll find it for you. And when you hear from me next, I will tell you to get your checkbook ready because I have found your deal. Whoa. Okay. That sounds pretty cool. 2 weeks later, we get that phone call. Get your checkbook ready. I've got the deal for you. And so that is exactly what happened. And she calls us up and says, I found this perfect property. It's up in Michigan, which was great because my wife's from Michigan. Her family's from Michigan. They were going to be investors with us, and having the property in Michigan was a great thing. She says it's a property up in Michigan. The seller's in trouble. He's managed the property badly, and he needs to sell it. The bank is beating down his back, and actually the bank will work with you towards replacing the owner. That was a red flag. That should have been a red flag. And if you ever hear anything like that, you got to ask yourself some tough questions. Okay, so that is something that that I didn't realize at the time. I found out afterwards that I should have picked up on that one, but I was such a novice in the business. So I said, okay, great. Tell me more about this property. Well, it was built in phases, and it's 128 units. What? This? I don't know if I told her. I think I probably, told her that my in-laws had experience in owning apartments and what have you, but I don't know if I told her that this is my first deal and I've never done this before. And 128 sounds like an awful lot. And so she said, well, how much can you handle? And I said, well, I don't know. Show me the property. So she showed me the properties, and they had been built over like a 15-year cycle. You can see different enclaves on this beautiful, bucolic piece of acreage. And I looked at him. I said, "Hey, what about this section in the back? Those look pretty good." She goes, "Yo, those are the newest. They're only about 10 years old. Those would be solid B plus properties, and those were built all together. And those are 40 units." Like, wow, that might not be a bad idea. How do you think they would feel if I just bought those 40 and the other 88, let someone else buy that? And they said, well, make an offer. Make an offer. I said, okay, all right, I'll make an offer. So at the same time, the bank, it's called Monroe Bank and Trust, had been courting us as well. That's the in-force bank, and they're the ones saying, "Hey, we can lend you on this one. We're already here. We can just do the paperwork." Okay, that's cool. And we figured out that we needed about 25% down. So let me do the math. It was $2.5 million was our offer, divided by 40 units. Yeah, about $62,500 a unit. So at 2.5 million, we got an 80% LTV. No, I don't think that's right. I think we got a 75% LTV. That meant we had to come up. Yeah, we had to come up with about 625,000. Very low closing costs. It wasn't much more after that, but 625,000. So what we did was we had two sets of investors, and so when we're sitting down trying to figure out how we're going to make this thing happen, we figured out that the bank is going to want someone to sign personally for the loan. It was a local lender, so it was a recourse loan. And we had to figure out who was going to be on that loan. So basically that turned out to be my wife and me and my in-law group. And so what we did in that case was that category of ownership, if they put $1 in, they got $1.25 out in the form of equity. Do you understand why I'm saying that? Because the other group of people that we raised all the money from, if we put $1 in, if they put $1 in, they got $1 out because they were not signing on the dotted line. It's essentially we're giving a premium to the people who were putting their name on the dotted line, taking the risk. And that was just fair. That's how we did it. And I'll tell you, the in-laws, we had the money all lined up, ready to go on day one. We had to go hit the market and raise, what do we figure, about 400,000? About 400,000. So we had to raise $400,000. That was a king's ransom back in the day. And we, had because of that membership in that guy's coaching program, we had a bunch of people we talked to. We had been doing the RIA club circuit for 6 months to a year. We were doing everything that we were told to do. And I'll tell you, we closed on that investment. We raised all the funds we needed in 9 days. This is my first deal. So this is like, wow, that was easy. And so what we ended up doing is we had the deal structured. We hired a securities attorney, put everything together, syndicated the deal. And then we closed on the deal. Now, here's one of the things that we had, a mistake that we had made. And this goes to, I teach people how to interview property management companies. My father-in-law owned a particular apartment complex up in a different part of Michigan. And the thing about this particular property was that it was a rural development property. And that's kind of, I call it Section 8 for farmers. And in order to own that type of property, you have to have a qualified property management company that just works with rural development. Well, they had one for theirs and they liked them. So we thought, oh, we'll take that property management company and just stick them in our new 40-unit property. And that was a disaster because they just worked with the government and they didn't know what free market meant. And we found that out very quickly when we took a property that was 95% occupied down to 55% occupied in about 3 or 4 months. And I'm pulling my hair out like, oh, they never taught me this in a boot camp. They never told me like how this was going to happen. And I sat down with the property management company. I said, what's going on? Why are these people leaving? And they said, oh, we're just cleaning out all the bad tenants. I said, yeah, but you're not replacing them with anybody. I said, well, what are you doing? What's changing? And they said, among other things, the one thing that I picked up on very quickly, and just understand this, that we are in a marketing business. They said, well, one thing that we did is we changed the rules on this property. Well, how'd you change the rules? Well, we implemented a no pet policy. You can't have pets. They were letting pets in, and it was bad. It was terrible. Remember, folks, it was a 128-unit complex. I just bought 40. That means the remaining 88 that the same guy still owns is just across the street. And I'm telling people with pets, hey, you got to get out. They're going across the street to the 88 units and they're having no problem. And the old owner is psyched because he's watching his occupancy skyrocket while mine tanks because my property management company was the wrong property manager. They thought they knew. They thought, oh, this is going to be easy. We'll just do the same thing. Let me tell you something. The thing about rural development, story of our government, you're listening to how they're paying immigrants $3,000 to landlords paying $3,000 to immigrants for moving in by our government. The same is true with rural development. They would pay a property management fee to the property management company, regardless of whether the property was occupied or not. If you had 50% occupancy, no big deal, because the property management company is receiving 100% of the fee. And that doesn't work in the free market system. That doesn't work in a market rate property. And I quickly found that out the hard way. And I had to scramble. I fired that company. I got new property managers in. We got an occupancy back up. It was a beautiful property, really nice. So that was the first problem we had with this. Now, let me tell you the punchline. Remember, all I wanted to do in the first year was to buy 20 units. And in the first 6 months of me being in this business, working full time, I owned 40. That's pretty good. And then I get a knock on the door from the bank. And they says, hey, you know that 88 across the street? I'm like, yeah, I am very well. I'm very well aware of the 88. He said, how would you feel about buying those? And I said, well, what do you mean? I just bought these 40. I'm pretty happy with myself right about now. He said, well, we can make you a deal that you can own the remaining 88. I said, okay, well, what do you think? And they gave me a price. I said, did a quick calculation. I said, oh boy, guys, listen, I just tapped out all my friends and family for their money just to get into this 40. I don't know where I'm going to come up with the money for the remaining 88. Well, how much money do you need? And they said, I said, oh, I'm going to need like $750,000 to buy this. And they said, okay, what if we lent it to you? I said, what do you mean, what if you lent it to me? So we will lend you the down payment. It'll be like a second note on that property, but you'll own the whole property. I said, you're going to let me essentially buy this property, no money down? They said, yeah, we want you to own this property because we like the job that you did on the first 40, this other 88, right up your alley. And so I'm on the phone with him. My wife is sitting right there, and I said, hey, this is the bank. They want us to buy the other 88 with no money down. They're willing to finance it for no money down. What do I tell them? My wife said, ask them how quickly we can close. And sure enough, 2 weeks later, after a year ago, I was in the miserable insurance business. I now own 128 units. And that is how I got started in this business. And the thing is, my wife and I and my father-in-law owned the 88 together, no investors. That was it. We just owned it. But let me tell you, folks, and this is something I teach my students, beware of seller financing. Beware of saddling the debt onto your property because there's a lot of stuff that, if you look at it, that I bought, this is how I explain it. I bought the 40 units the right way. I bought the 88 units the wrong way. And the difference was that I always cash flowed very nicely with the 40 unit property. And some months I had trouble breaking even on the 88 units. And so I purchased that one the wrong way. Should never, it was 100% financing. The property can't support 100% financing. So I don't even know why we did it. We did it because we thought, whoa, no money down, yabba dabba do. In hindsight, we probably would have been better off moving on and finding something else, but keeping those original 40 units because those were good properties. And then since that time, I purchased dozens of apartment complexes. I've been investors in them. Now I'm into hotels, converting hotels into multifamily, which is the greatest thing in the world. If you do the numbers, you will be blown away. And as a matter of fact, we are actually financing. We're funding a hotel right now, a hotel that we're going to convert to apartments. And you can see just from those the pitch deck that we have, or if you want to talk to me about it. So this is the website right now. It's hotels to home conversions.cashflowportal.com. Why don't you refi the 88? Okay, Seep is asking the question, why didn't you refi the 88 units? Because it was, okay, I'm trying to say this in a way that we just couldn't. It was 100%, it was upside down. It was, we would have had to, remember the market just crashed shortly thereafter. So the cap rates were rising. The value of that property was going down. I couldn't refi. I would have to come, and that's ultimately what we had to do, is we had to put $250,000 back into that property just so that it would meet the bank's requirements, lending requirements, and because the bank examiners came in and said that collateral has gone down in value and it's not enough to support that loan. You need to have a cash call with the borrower. So we got cash called on that property to bring us up to 80% LTV, which was barely even the right number. But the thing is, there wasn't any equity in that property. Remember, we bought it at 100% LTV. So there wasn't enough money in that property to do any type of refi. I hope that makes sense to you. Yeah, so that's that. Yeah, so the hotels to homes conversions is my partner David Peters and I. And if you go into Joe Fairless's conference out in Utah, the best ever conference, my partner David is going to be pitching a couple of hotel conversions that we're working on when he's out there on the big stage. He was chosen as one of the pitch slam conference. He's been invited to speak there to talk about the how the numbers work. So how hotel conversions work and why they're so great as far as creating equity and creating value for investors. It's fantastic. So, all right, that is it. I mean, from that point on, I did master leases. I'll never do another no money down deal. And we're looking at 2 seller finance deals right now. And I'll tell you, when I get on the call with my partners, with the people within the cohort program in our hotels to homes cohort, you got to give me a good story as to why I should do a seller finance deal. We had a couple of our investors, members of the cohort, went out to work with another hotel converter on a deal down in Texas. And it was a seller finance deal. And I looked at it and said, this is not a good deal. Trust me on this one. But they went for it. And, you know, as one of them told me today, he says, it's hard to screw up a 1-car funeral. But I'll tell you, I don't like that deal at all. I've seen those deals. I'm not in love with them. And these 2 deals that we're looking at are hotel conversion opportunities with seller financing, which you actually do see a lot of, but you still need to show up at the closing table with a lot of money. You just do. You cannot do a conversion out of current cash flow, because if you could, the seller would do it, and he doesn't have any more money. So he wants out, and he's willing to offer financing to you in order to make it happen. So don't be that guy. Or at least if you are that guy, be very smart about it. If you have any questions about it, you're concerned about it, please reach out to me. Send me an email. I love helping people and making sure they do the right thing. I don't want to see you make mistakes, the same mistakes I had made over the last 20 years. I want to make sure that you do this business the right way. So that's what I always teach my students is there's going to be a lot of tough love. If you are not listening to me and you're not coachable, we're going to just shake hands and part friends. Because if you're not going to listen to me, the reason why I have the advice that I do is because I've needed that type of advice and didn't get it and lost a lot of money over the years. But nevertheless, best move I ever made 20 years ago was to get into this business, and I highly recommend anyone else do it as well. Let's see what's John. You are a rare breed, Charlie. Thank you for that. Hey, John, appreciate that, man. Appreciate that. Yeah, I love what I do. I love what I do, and I would like to see people succeed. Greatest compliment, and this is other teachers, trainers, gurus, whatever you want to call us out there, do not espouse this same belief that I have. One of the greatest feelings I have is when I see a past student of mine going out there to compete against me in the coaching space. That to me is a huge compliment. Believe me, there's plenty of students out there looking for good advice. You know, no one's going to starve. But it is such a compliment to me to know that my students, and hey, they always know that they can give me a call and say, hey, how do you handle this? And I am there for them. That's the way it works. All right, folks, this has been, I hope this has been an eye-opener, a little education. If anything, you just got to take that first step. Keep falling forward. Don't be afraid of it. You're going to make mistakes. If you're working with me, I'm going to protect you. But don't worry about it. That's what it's all about. We're all going to make mistakes. And that's why they call it the practice of law, the practice of medicine, because we never get it right the first time. So, so I hope this was helpful to all of you. Thank you so much for showing up to hear my life story. We're going to close on this Louisville deal at the beginning of May. So if you're interested, it's not a big raise, so we're going to close it out quickly. But if you want to find out more information, please just shoot me an email. I'll put my email down here so you can see it. And you can reach out to me, and I'll get you over the information for the investor portal. I also have that up here. And then if you want to find out more information about the Louisville deal, go to this site right here, register, shoot me an email. We'll get on the phone. We can talk about it. But we're hoping to close this deal out by the end of this week. So, all right, everybody, it's great to see you all.